Education insurance basically gives you an opportunity to take that child to school, whether you are there or not. So under life insurance, it ensures whether you are there or not, the child will still go to school. So it's very critical because at the end of the day, education is the key to success. It equals everybody. So we have one solid product called Academia. This particular solution, basically, it covers the parent in case of demise. So for our Academia, based on the sum assured the parent has taken, then they get a cover in case of demise. The insurance company will pay 50% of the sum assured to the next of kin, and then the policy will continue running. We'll be able to pay partial maturities, and still, partial maturities basically are the school fees that come in handy at the time when the child is going to either Form 1, Form 2, Form 3, Form 4, and then there's normally a final maturity. So number one, demise, that's the first coverage. And then number two is permanent total disability. When you have an education cover, it gives you that opportunity to have cover in case of permanent total disability that can arise from either illness, either illness, first-time illness, or an accident. So if you're permanently disabled, you are no longer able to work, but you're still alive, then education policy comes in. We'll still pay your premiums on behalf of the customer. So we waive the premiums. So you can still have an education policy. Even if it's for 3 months and something happens, the insurance company, CIC, will pay for you the premiums until maturity. And you know, education covers are not short-term policies. At least an average of 10 years is a good cover, minimum 10 years. And then by the time the child goes to school, maybe on the 8th year, that's when you start paying the partial maturities. If you take a policy term of 12 years, that is the duration of the cover. So that means you're targeting that child to go to school. And when you start paying premiums, there's also a premium term. So your policy term is 12 years. Your premium term would be around 7 years. So for our Academia, the only one in the market, when a customer starts receiving partial maturities, you don't pay premiums. So if your policy term is 12 years, on the 7th year, you stop paying premiums. You start receiving what? Partial maturity. School fees year 1, year 2, year 3, year 4, and final maturity. Other insurance companies, you're receiving your partial maturities. If you're paying 10,000 per month, you still pay 10,000 shillings a month, and you still receive your partial maturity. So you pay premiums for the entire period. So for us, you choose. I want to pay premiums for 7 years. Then the last 5 years, let me receive my partial. So that's one unique factor about CIC Academia. An education cover basically is steered towards children. So in my experience, I would recommend if you're a parent with a child less than 8 years, then that can really tune in for an education cover. For example, if you give them a 7-year premium term and they are 8 years, by the time they are 15, probably they are in Form 2 or Form 1 or Form 3, Form 1, Form 2, Form 3. So that education cover will sort that issue of school fees, So I encourage anybody who has a child below 8 years, that's a good place to start. If your child is already in education, in university or already in high school, probably not a good candidate unless I just want to give you a policy. But if I'm to do need analysis, 8 years and below is a good place to be in terms of taking an education cover. And you can target university. So you can take a 12-year term. 8 plus 12 is 20. By the time they get to first year, second year, third year, fourth year, you have money to take them to university. Because sometimes it's affordable. Maybe you want to take your child abroad. As in, if you want to educate your child in Germany or Poland or France or the US, as in you need money, or Australia or Canada. So you can plan for that early in advance by saving. So we give you that platform. So I encourage Kenyans, please, don't just be fixated on misconception. Education is one of the ways to diversify your investments. Take that life policy. It guarantees your child an education, whether you are there or not. Land is good, but it might not guarantee. It might not guarantee.